Today on your Finance and Economy Today, where we review facts, data, insights, and how it affects you. Bitcoin turned 8 cents into $95,000 over 15 years. Today we are going to walk through every boom, every crash, and what the data actually tells us about the world's most volatile major asset. Imagine putting $1,000 into something in 2015, not a tech stock, not real estate, Bitcoin. At $250 per coin, you would have bought 4 coins. Today those 4 coins are worth $260,000. That is a 260 times return in 10 years. But here is the thing, along the way, that investment would have crashed 77% once, and you would have had to hold through all of it to see those gains. In the next 12 minutes we are going to cover the full 15-year price history of Bitcoin, what drove the biggest booms and crashes, and what this data means for everyday people thinking about crypto today. Let's start with the numbers. Here's where Bitcoin stands as of 2025. The current price is approximately $65,000 per coin. That is down from the all-time high of about $95,000 set in late 2024. From that peak, Bitcoin has pulled back roughly 32%. Now let's put this in perspective. In 2015, one Bitcoin cost $250. Today that same coin is worth $65,000. That is a gain of 25,900%, or about 260 times your money. $1,000 invested in 2015 at $250 per coin would have bought 4 coins. Those 4 coins are worth approximately $260,000 today. That is not a rounding error. That is a life-changing return for people who bought and held through everything. But here is the flip side. If you bought Bitcoin at the peak in November 2021, when it hit $69,000, and you sold at the bottom in November 2022 at $16,500, you lost 76% of your money in 12 months. Same asset, completely different outcome depending on when you bought. According to CoinGecko, Bitcoin's market cap as of 2025 stands at approximately $1.25 trillion, making it the largest cryptocurrency by a wide margin. But to understand where we are, we need to see where this all started. Let's go back to the beginning. Bitcoin was created in 2009 by a person or group using the name Satoshi Nakamoto. In its first full year of trading, 2010, Bitcoin was worth 8 cents per coin. At that price, $1,000 would have bought 12,500 coins. If you still hold those coins today, they are worth over $800 million. But basically nobody did that. It was an experiment, a digital curiosity. Very few people understood what it was. By 2013, Bitcoin had its first major rally, climbing from around $13 to over $1,000 in a single year. Then it crashed right back to around $300 and stayed there for 2 years. That was the pattern Bitcoin would repeat over and over again. In 2017, Bitcoin exploded from under $1,000 in January to nearly $20,000 in December, a 20-fold gain in 12 months. Then 2018 happened. Bitcoin lost over 80% of its value, falling back to around $3,000 by year-end. Investors who bought at the top waited 3 full years to get back to even. 2020 was a turning point. Institutional money started entering the market. Companies like MicroStrategy and Square put Bitcoin on their corporate balance sheets. PayPal added Bitcoin support for its 375 million users. Bitcoin ended 2020 at $29,000, up 300% on the year. By November 2021, Bitcoin hit its previous all-time high of $69,000. That peak marked the top of the cycle. What followed was one of the most painful crashes in Bitcoin's history, and we will get to that. So what actually pushes Bitcoin's price up and down so dramatically? Bitcoin does not have earnings reports. It does not have a CEO. There is no Federal Reserve setting its price. So what moves it? A few key forces. First, supply. Bitcoin has a hard cap of 21 million coins. That is it. No more will ever be created. And roughly every 4 years, an event called the halving cuts the rate of new Bitcoin production in half. In April 2024, the most recent halving occurred. Before every previous halving in 2012, 2016, and 2020, Bitcoin's price eventually surged. The logic is simple. Less new supply entering the market, same or growing demand, price goes up. Second, institutional adoption. When large institutions buy Bitcoin, the price moves. In 2020, MicroStrategy put $425 million into Bitcoin as a treasury reserve asset. In January 2024, The U.S. Securities and Exchange Commission approved the first Bitcoin spot exchange-traded funds. 11 ETFs launched on the same day. In their first week, they attracted over $10 billion in new investment. That was a watershed moment. It opened Bitcoin to every retirement account and brokerage in America. Third, fear and sentiment. Bitcoin is driven heavily by retail investor emotion. When prices rise, new buyers flood in. When prices drop, panic selling amplifies the decline. This is why Bitcoin's crashes tend to overshoot on the downside, and its rallies overshoot on the upside. The data shows Bitcoin moves roughly 4 times more dramatically than the S&P 500 in both directions. Here's how governments and regulators have responded to Bitcoin's rise. Bitcoin started outside the financial system. Governments did not take it seriously. Then it got too big to ignore. In 2013, the U.S. Treasury's Financial Crimes Enforcement Network issued the first federal guidance on cryptocurrency, treating crypto exchanges as money services businesses subject to anti-money laundering rules. In 2017, as Bitcoin hit $20,000, regulators worldwide began paying close attention. South Korea banned anonymous crypto trading. China banned initial coin offerings and shut down domestic crypto exchanges. Those moves sent Bitcoin down 40% in a matter of days. In the United States, the Internal Revenue Service clarified that Bitcoin is property for tax purposes, meaning every time you sell or spend it, you owe capital gains tax. That rule has been in place since 2014. It is the law today. In 2022, Congress saw its first serious push for comprehensive crypto legislation. Multiple bills were introduced but none passed. In 2023, the SEC sued major crypto exchanges including Coinbase and Binance, arguing many crypto tokens were unregistered securities. The legal battles are still ongoing. Then came the pivot. In 2024, the SEC approved the spot Bitcoin ETFs we mentioned. That was a major policy reversal, a signal that regulators were moving toward accommodation rather than prohibition. The incoming administration in 2025 signaled a friendlier posture toward crypto overall. A formal national Bitcoin reserve was discussed but not enacted as of mid-2025. What is clear is that Bitcoin is no longer a fringe asset that regulators can ignore. The rules are still being written. Now, what does 15 years of Bitcoin data actually mean for you? Let's get concrete. If you put $1,000 into Bitcoin in 2015 at $250 per coin, you would have 4 coins. Today, those 4 coins are worth approximately $260,000. That is a real number. But let's be equally honest about the other side. If you bought $1,000 of Bitcoin in November 2021 at $69,000, the all-time high at the time, by November 2022 you had $238 left. You lost over 76% in 12 months. Both of those stories are true. They happen to real people. The data from CoinGecko shows Bitcoin has had 4 major crashes of 50% or more since 2013. Every single time, it eventually recovered and set a new all-time high. But every single time the recovery took years, not months. The average investor cannot emotionally hold through a 70% crash without selling. That is not a personal failing. That is human psychology. If you are thinking about Bitcoin today, here is what the data tells you. Number 1, never put in money you cannot afford to lose completely. Number 2, the smaller your position relative to your total savings, the easier it is to hold through a crash. Number 3, the people who made the most money bought early and held for years, not weeks. Bitcoin went from 8 cents to $95,000 in 15 years. It made some people wealthy beyond their imagination. It wiped out others who bought at the wrong moment and could not hold through the pain. The data does not tell you whether to buy Bitcoin. It tells you what you are actually signing up for. Extreme upside, extreme downside, and a recovery timeline measured in years. If this breakdown helped you understand Bitcoin's history and what drives it, hit the like button and subscribe to Your Finance and Economy Today. We cover the numbers behind the economy every week in plain English, no hype, just facts.